And now let's take a closer look at the markets. For more, let's chat with Randall Eley, President and Chief Investment Officer at Edgar Lomax Company. Randall, great to have you on this Friday. Futures, as we were just mentioning, pointing to a bit of a higher open on
Yes.
perhaps positive trade talks. Can we really be optimistic, though, about the relationship between the U.S. and China right now?
Long term, yes. Um, there's a lot of noise when it comes to the market and economies, and certainly when it comes to trade talks. And the various countries are struggling with the economic after effects, or I should say, the effects of the pandemic, as well as many of the imbalances that were developing even before the pandemic hit. But in the end, we're the two biggest economies in the world, so we're going to have to work this out.
How much do you think China's reported increased purchases of American goods will help the U.S. economy, especially right now?
Oh, everything helps. And so I'm not sure we're talking about noticing um, any great differences over the next 3 to 6 months, but long term, it's certainly going to help our balance of trade. But we have to do a lot more.
How much will the unknown spending that's just tied to treating and preventing the coronavirus impact the economy?
There's little doubt in my mind there's going to be slower growth, but that comes from a number of things. If you remember studying about the 1970s, inflation and the government spending at higher rates than were seen before that time slowed growth. And since that time, we've had huge trade deficits. We've had general deficits in what they call the current account. So all of those, these are loans the country has made. Those things have to be paid back. And of course, we have a lot of rebuilding of the economy from the damage from the pandemic. But still, I doubt if we're talking over the next 10 to 20 years more than 2 to 3% off of the normal expected growth.
It just, we got unemployment figures yesterday, which were pretty disappointing. Just 1.5 million Americans filing for first time unemployment claims.
Yes.
And then last month's jobs report was just so unexpectedly good. I'm curious, what do you make of it? Where do you think the real picture right now is for employment in this country?
Yes. Again, I don't think we're going to know until the some long-term solutions to the pandemic are in place, but it's coming. I mean, human beings in history have sooner or later overcome these problems. The American economy is huge. I mean, we're looking at annual economic production of what, 21 to 22 trillion dollars before the pandemic. We're also looking at what the Federal Reserve estimates as the country's net worth of about $95 trillion dollars. And this is after the market fell in March. So this is an economy that has a lot of assets to restart itself and to rebuild. But about a year from now, maybe a year and a half from now, it's hard to believe we won't be behind a lot of this and be in the rebuilding process.
Do you think that that the stock market has gotten ahead of itself? I know it's a futures looking, barometer, but do you think that maybe it's too far ahead of itself?
Yes. Now for the long, for the medium term, I think it's ahead of itself. Meaning over the next 2 to 3 years. In the shorter term, though, the Federal Reserve has pumped a lot of money into this economy. They also, in order to do that, have interest rates extremely low. So you can't get any returns. I don't mean just after inflation. You can't get any returns above zero point 0.2 or 0.3% in investment grade investments without going to stocks. So I would not be surprised if by the end of this year, if stocks have held up pretty well and maybe even a bit higher. But over the next 2 or 3 years, then we'll see the market, I believe, return to normal, which will be ups and downs, and we could get a bear market somewhere in there.
A bear market, you said.
Yes, yes. And when I say a bear market, I'm not talking about anything that's extremely terrible. Anything is possible, but once that bear market, when it next comes, is over, then we get another bull market, and that's where we see the real rebuilding of America taking place.
It feels like the Fed won't let that happen. Any concern that
So
the Fed is pumping so much stimulus in and boosting the markets so much that just this
that's right.
natural progression. If you look in the history of the stock market, you don't want to be involved necessarily in the downturn, but it is a natural thing that markets also fall.
That's right. It's very natural. The Federal Reserve has literally become the country's major consumer. And long term, they're not going to be able to keep that up, I'm convinced. But in the short term, I think there tends to be general agreement that it makes sense for them to do something to help us all through this. But I, for one, am expecting that once long-term solutions to the pandemic are in place, that we will see the Federal Reserve gradually pulling some of that stimulus away.
All right, Randall Eley, President and Chief Investment Officer at Edgar Lomax Company. So great to have you on this morning. Really appreciate it.